Welcome to Digital Asset News. Take the top stories in cryptocurrency and digital assets and break them down to bite-sized pieces. Today, we've got one article which branches out into many facets. And I got to tell you, it is one of the most fascinating, exciting, and scary articles and publications I've read in quite a long time. And I have to share it with you. So we're going to go over that. But first, let's take a look at what the market is doing. So first up, we've got Bitcoin up 1%, which is great. So still holding steady around the 7,500. Ethereum 189, I like that. XRP 19 cents, fantastic. Tether, Bitcoin Cash, Litecoin, EOS, Binance Coin, just kind of doing their thing. Even Litecoin's up. Wow, congratulations. Tezos, one of the big winners at 9%. And to make everybody happy, let me just go down to Digibyte, because I heard that in the comments about 100 times about how great Digibyte's doing, and sure enough, it is doing fantastic. I think it's up like hugely over the last week. I think it was at 0.007 at one point. Now we're at 0.013. So, hey, congratulations, Digibyte, for holding on. If you have any ideas as to why Digibyte is pumping so hard, let me know in the comment section, because that's always interesting to me. I know it's very fast. I know the Digibyte community loves it to death. But change my mind. Tell me exactly why it's so awesome, because I'm just uninformed. That's my problem. I'm uninformed. All right, so that's doing good. Let's take a look at the S&P 500. And today, going up like crazy, which I don't understand, but sure. Previous close at 27.97, today at 28.331. Let's take a look over 5 days. How's it been? Drops, peaks and valleys. And the 1 month, looks like it's recovering quite nicely. So everybody is focused on the markets and they're all happy. So that's great, but what we're going to go over today by an extremely reputable source, a MacroEconomist, is going to talk about these things. I don't see good things ahead for the traditional markets, but I see great things, awesome things, outstanding things for the cryptocurrency digital asset market. And let's just jump right in. So here's the article. Boomer generation for a rude awakening. MacroEconomist predicts 1 million Bitcoin by 2025. And I got to tell you, like when I see these 1 million Bitcoin predictions, I'm always like, whatever. Because I remember my man, John McAfee, coming out and saying the same thing. And he was just nothing. So with this article, I was already hesitant. But when I read about who wrote it, I'm like, okay, this has validity right off the bat. So just recently, a report from GMI, or Global Macro Investor, called The Unfolding, claims the world has experienced the biggest economic event that hasn't been seen in the last 150 years. GMI CEO Raoul Pal authored the report, and he strongly believes the digital asset Bitcoin will go from a $200 billion asset, which is peanuts, by the way. It's peanuts. $200 billion, that's nothing. To go from that to a $10 trillion asset class within the next few years. Not in 20 years, not in 25 years, the next few years. And he lays out a case for it, and it's beautiful. In fact, Powell's macro report stresses that the baby boomer generation is screwed. And we're going to take a look at those types of investments and retirement plans and pensions and what's going on. So before we go on, let's talk about who Raoul Pal is, because if I'm just quoting somebody, you got to know like where the source is coming from. So Raoul Pal, he was a former Goldman Sachs executive and a hedge fund manager, retired at 36, and he's just been all over the place. Not only that, but he co-managed the GLG Global Macro Fund for GLG Partners, retired again. Wow, 2004. Good for him. Since then, Pal launched the GMI and Real Vision TV, sort of Netflix for finance, according to the website. It's pretty interesting stuff. I've seen a bunch of his things. He's interviewed a lot of interesting people, very smart people, and that's what I like, because I need to surround myself with people much smarter than me, which, by the way, is not that hard. And I need to get the best information, and this is exactly what he does, and I believe in that. So let's continue on with the actual article. So moving on. A 120-page global macro investor report explains that the world economy is headed for a disaster. I cannot agree more. Raoul Pal says that during the next several years, society will experience 3 phases: panic, hope, and insolvency. So what does that all mean? So what we're going to do is we're going to take a quick look at the report and see what it exactly says on panic, hope, and insolvency. So this is where you can download the report for free. And what was interesting about this is that this is a paid subscription, I guess, for hedge fund managers. And he gave this one away because it is important and it's long. And if you want to read it, be my guest. I did, and it's fascinating. But the unfolding is the April issue of GMI, flagship institution, where I advise many of the world's most famous hedge funds, asset managers, sovereign wealth funds, and family offices. This is the most important piece, and he wants to make it available to everybody for free. So I just entered in my email, got it for free, and it's great. So real quick, here's the actual unfolding, the PDF document. Very easy, you can get it yourself, and I'll give you the link in the description below. And then it just talks about deep thoughts. And we're going to go, later on, we're going to go through all the way through the first part. We're not going to go through the whole thing because we don't have time to go through a 120-page document. We don't have time for that. I mean, I do, but I don't think you do. So I just gave you the highlights and the stuff you need to know. So first up on page 4, the panic is the liquidity phase. And that's kind of what happened just a little bit ago. Now remember, this is the April edition. He published this on March 31st for the April edition. So the things that he's talking about in this report, we can see have already happened. So panic is the liquidity phase. The hope is the correction phase, and we're seeing that right now. And finally, and I believe this to be true, the insolvency, the brutal phase that changes everything, including the system itself. So let's jump back to the actual article. So we're going to get into those in detail in a bit, but let's just read the cliff notes. So Pal's charts and statistics show the economy is dragging downwards with great force, and we'll go over that. As his findings show, China falling Purchasing Managers Index, or PMI, has been falling like a rock. Chinese retail sales continue to plummet. The country's industrial production is sliding. Car sales are bombing. Fixed assets, it's just awful across the board. Okay, everything's imploding and going awful. And all these negative factors are relatively the same in countries like the US, Japan, Australia. So for all my subscribers out there who are listening right now or watching the video, welcome. Let me know if you see the same thing is true, or if you see an economic flourish that maybe is not out there. So Australians, I know I got a lot of you guys. Hello. So let me know in the comment section below. Moreover, one large piece of evidence that something is horribly wrong is the worst unemployment data imaginable, and the market rally, which is amazing to me. We are sitting at 26.5 million people are unemployed in the United States. 26.5. Our total population is 330 million, but out of those, you have to take into account, well, how many of those people are actually of working age, can work, are not retired. So it's a much less. So 26.5 million is quite a bit of people, and yet the market goes crazy. That is not a good thing. That is not how it works. So Powell's report also discussed the similarities between now and the Great Depression. The damage this does to the U.S. pension system is incomprehensible. The baby boomers will sell every rally they can to protect their last rapidly diminishing nest egg. And that is scary news if you're a baby boomer. But there is good news on the horizon, and this is what excited me all about it. So again, this was a very scary article, fascinating, scary, but also exciting because Bitcoin is a call option on it all. It is the future. Powell's research says that gold is performing well through all this, and it will continue to do so. The report notes that a break past 1,800 an ounce will be the initial trigger and massively outperform equities. Powell expects gold to rise by 3 to 5x in the next few years. Great. If you're not into gold, you're like, who cares? But when Powell gets to the subject of Bitcoin, he stressed that the digital assets performance will be a totally different story. I think Bitcoin can get to 1 million in the same period. I think it can go from 200 billion to 10 trillion asset class. Gold as a comparison is around 15 trillion now, including paper gold, Pell says. If gold goes up 5x, it becomes a $60 trillion asset. So could it be crazy for Bitcoin to have a 10 trillion valuation? Powell states further, Bitcoin isn't just a currency or even a store of value. It's an entire trusted, verified, secure financial and accounting system of value that can never be created outside of the cryptographic algorithm. It is nothing short of the future of our entire medium of exchange system and of money itself and the platform of which it operates. So when I read this, the first thing I thought of is, okay, well, we know some things about Bitcoin. First of all, we know Bitcoin is slow. I don't care if you're the biggest Bitcoin maximalist, you guys know it's slow. And I'm an investor. And just for clarity, here's what I invested in. I've got Bitcoin, Ethereum, XRP, EOS, Cardano, Chainlink, and Tezos. So when I talk about these things, obviously I'm biased, so I'm right there with you. So Bitcoin we know was slow. We know the transfer costs are going up. We know the current system can't handle it if we switched over to even a minority of people using Bitcoin for transactions. That whole thing would just crash like crazy. Now we have the Lightning Network and sidechains and things like that, but it's just not ready, not yet. However, so for all the XRP maximalists and the Chainlink Marines and all the people out there who say Bitcoin is old and a dinosaur, I have something to tell you. It's trust. Trust is a currency you cannot buy. And Bitcoin has been around for a decade plus, and it has proven itself, it is battle tested, and it has won every war that has been around or has been through. So when you talk about trust, people need to shift from something that they trust, from dollar, gold, their stocks and bonds, something that is proven. And right now, a lot of different elements out there are not proven so much. So to me, that is the biggest thing. I can't buy trust. But if you have an asset like this, over time, you can gain it. It takes a lifetime to build trust, but it only takes seconds to destroy it. So I think as time goes on, people are going to look to Bitcoin and go, you know what? I trust that. And a lot of people, especially the mass adopters, are not looking for the flashy, easy, whatever else. They're looking for trust. Now, I think later on, who knows what's going to happen, but for right now, trust is it. Moving on. With all the other crypto, and this will also play into account of, it's not just Bitcoin that is going to be trusted. It's going to be other digital assets. So whatever you're into, if it's Ethereum, if it is Tezos, if it is Tron, if it is Digibyte, if it is Tomato Coin, it doesn't matter, whatever you're into. I see that a lot of these projects are going to come up with Bitcoin and the cryptocurrency digital asset market. This is an asset class. I don't think we are fighting against each other. I think there's room for a big swath of projects. So it says, with all the other crypto projects and blockchains being created, Pal says the entire crypto economy could easily be a 100 trillion market valuation. Let me read that again. With all the other crypto projects and blockchains being created, Pal says the entire crypto economy could easily be a 100 trillion market valuation. So before we go on, let's talk about how much money there is in the world, because some people will say that seems ridiculous to have a 100 trillion market. That just doesn't sound right. Well, let me just show you exactly how much money, finance, everything that's out there in the world. This is in 2017. This was given to my man, Len Mullet. Thank you. And this little square right here represents 100 billion. Okay, just remember that. That's one little square, 100 billion. It's a lot of money, I think. Silver, cryptocurrency, is right here. Bitcoin, 100 billion. The rest, 45, Ethereum, 28. So about what we're at right now from 2017 when this thing was actually created. Here's the biggest companies. Here's the 50 richest people. Look at those guys. Good for them. California's GDP. California, 2.9 trillion. Just the state of California. The Fed's balance sheet, 3.5 trillion. And that only ballooned up as of the last couple months. Coins and banknotes, 7.6. The world's gold, 7.7. You know that went up that we just talked about, because it is not finite like Bitcoin. It's scarce, apparently, but it's not finite. Stock markets, 73 trillion. Stock markets. Narrow money, 36.8. Broad money is 90.4. Global debt is 215 trillion. Get that into your brain right now, because it just went up massively. And that's all those nice little squares. And here's the global real estate, 217 trillion. And that's before we get to derivatives. Derivatives are 544 trillion. And that's on the low end. On the high end, which is right here, because no one really knows, it's 1.2 quadrillion. And there's Bitcoin. So when we talk about like, oh, what, 10 trillion, 50 trillion, 100 trillion, how is that possible? It's possible. Look at what we just saw. So, moving on. The report from GM and its chief executive Raoul Pal followed the recent research by Bloomberg that says Bitcoin will be digital gold in 2020. Let's take a look at that. This was the report, as reported on Bitcoin.com. Bitcoin to be digital gold in 2020, sends Bloomberg report. Bitcoin will mature into a gold-like store of value this year, according to the latest projections by Bloomberg. The Financial Magazine's report, Bitcoin Maturation Leap, and this is what it looks like right here. They pretty much say, look, it's turning into digital gold, and I can believe that. I see gold, just physical gold, as the old world, old generation store of value, and I see Bitcoin as the future of that store of value and just that gold part, just digitalized. And as time goes on, we'll switch back and forth. I have no problems with either one. If you want to own both, fantastic. So it makes sense to me. Moving on, he says, additionally, Bank of America just published a report that indicates gold may jump 50% from its current price and possibly touch a high of $3,000. Beyond traditional gold supply and demand fundamentals, financial repression is back on an extraordinary scale, the BOA report author says. And this is what they're talking about, the BOA report, Bank of America. So why do I talk about gold? Because who cares about that? This is a cryptocurrency digital asset channel. It's because I believe that gold, which is, they call it a safe haven, although it didn't really act like so much, and now it kind of is, a store of value, and Bitcoin go hand in hand as a tandem. I think they're more of like a Batman and Robin. Nah, that's not even a good one. Batman and more Batman, I guess, because they're great for their own thing. One has been around for thousands of years. One has been around for a decade and has crushed every different asset. It's a whole new asset class. And when you put them both together, it's just a win-win situation for everybody if you want to hedge your bet like that. So this is great, but let's dive into the actual report. And like I said, it is fascinating, it is scary, and it is exciting, all rolled into one. So so we're back here, the unfolding. Let's just skip all the way. There's just, because the first part talks about the coronavirus and the total cases and how bad it is. And we all know that. I don't need to go over that. I don't need to tell you infection rates and death rates and right? It's awful. Looks like it's doing well. Hopefully we're starting to level off, flatten the curve, and all that great stuff. Fantastic. So what I'm trying to get to is page 16. Here's the facts, Jack. The economy. And this is just what we talked about in the article. This is just to give you a graphical representation of what was said. Here's China's PMI. Here's the Chinese retail sales. Here's the industry China value-added year-over-year percentage. Here is the China car sales. And it goes over everything. The fixed asset class, Australia, Roy Morgan consumer confidence down the toilet, as of the PMI. So everything that you can see is just going in one direction. However, we just saw the S&P 500 is going up. So what's going on here? Because here's our jobless claims going through the roof. And that is never good. So let's see what could potentially happen in the future. So it comes down to this. If you gave a kid a chart of recessions and the peak to trough move in the SPX said, okay, in a really bad recession, what's the general decline? The answer would be somewhere around 40 to 50%. That's the kind of market fall you could see as GDP goes in the negative. So not to make it too technical, in 1970, quarter over quarter, GDP, gross domestic product, fell by 4.2%, which doesn't seem too much, right? And the market fell 37%. 1974 went down 4.8, went down 45, then 8%, 27, 1.7, 51, and then 2008, negative 8.4, and the market fell 58%. That's a boatload. But currently, we have the most, or second most, overvalued market in history with a negative 25% quarter over quarter GDP reduction. And the peak to trough has been negative 34%. So that doesn't add up. Because in 2008, we saw a GDP of negative 8.4. Now and it fell 58%. Over here, we got negative 25 and only fell negative 34%. So what is going on? Let's take a look. So again, more graphs and just the basic things. Yes, we know all this. It's awful. So it comes down to this. So there was fear, hope, insolvency. And he says here, and remember, this was written on March 31st, and it was published on March 30th, published on March 31st, April 1st. And he says, so I think we have a week or two left of peak fear. And we saw that in March, big drop. And then maybe a couple of weeks, we saw some, slight declines and whatnot. And then we can play out a larger correction as everything looks at hope as their strategy. And that's what we saw. We saw it go down in March. April went down went down, and then we started to see this correction, this not a V shape, but a U shape. And he said again, look, it could be a V, it could be a short U, but we're going to see some type of small correction. And this is the identical narrative shift from 1929 to 1930. And then we came up here, a little bit of a hope, and then boom, huge slide. And that's what we talked about 3 or 4 videos ago, the same type of thing. And we took a look at 2008, 2000, and then all the way back to the Great Depression. And it's the same thing going over and over again. So if you're a TA person, this is right up your alley. So that is hope. What's going to happen after that? We have insolvency, or as he likes to call it, when it all falls apart. What's unfolding has elements of all the macro events of my lifetime plus 1929 all rolled into one. The everything crisis. It has elements of the Asia crisis, which was a debt crisis and the crushing of hubris or pride. It has elements of 2000, which was an equity bubble. It has elements of 28, which was a liquidity crisis, and it has elements of 29, which was all of them, plus a currency crisis and a solvency crisis. So let's take a look at what happened. The largest equity bubble of all time, which is a pensions crisis and buyback bubble. God dang buybacks. The largest wave of retirees of all time, which is the pension crisis, which retirees own all the stocks and credit. Largest corporate credit bubble, student loan bubble, auto loan bubble, indexation bubble, the ETF market structure bubble, the foreign borrowings bubble, the bubble in monetary policy, which is the central bank's issue, and an EU banking crisis. So they were all in place, and just as the Fed tightened and caused a slowdown, Trump shattered the global supply chains by initiating trade wars, and the black swan of the coronavirus hit. Not to be political, but that happened. Global supply chains went into a screeching halt. Whether it's good or bad for what happened is irrelevant. We're talking just about how this relates to the economy. And we knew it was going to slow down because that's what happens when you have a tariff war. Moving on. So he sums it up all like this. If the largest GDP shock driven by the largest supply and demand and liquidity shock in all recorded history doesn't ignite this problem, then we can all go home and declare macro dead, because it would make no sense. And that's where it all goes into play. So that was scary. Let's be honest. You heard that, not very positive news. So like I said, this was one of the most fascinating, one of the most scary, and one of the most exciting. So let's get to the good stuff, huh? Let's scroll all the way down to 58. Man, that was a lot of graphs. So the future. What's the future? He states not comfortable with the risk of leaving over FDIC limits of savings over time in banks or in cash. I think it's up to 100,000 in any one bank. It's not an immediate concern, but it's a possible future concern. Sure. The only answer that makes any sense are gold and Bitcoin. Gold is the protection of our assets. Bitcoin is the call option on the future system. And I can only see that. It only makes sense to me. Like I said, gold. It is an old world, old school. It's been around for thousands of years, and it's worked for a long time, and people trust it. Bitcoin is the new option. It's been around for 10 plus years. People are into it. People are going to trust it or do trust it now because it has been battle tested and proven. You put those two together, win-win. And he says both are going to save us and probably make us rich, and I could not agree more. Let's move on. Some more graphs, just staking his case. And again, I'll link this in the description below so you can take a look at it. So here's the meat and potatoes of the whole article, the crux of the situation, the crux of the article. He says gold can go up 3x or 5x in the next 3 to 5 years, and that's awesome for gold. Good for gold. Hey, great. Bitcoin, that's different. He says, I think it can get to 1 million in the same period. I think it can go from a 200 billion asset class to a 10 trillion asset class, and that's where he talks about it in the charts above. Gold as a comparison is around 15 trillion now, including paper gold. If gold goes up 5x, it becomes a 60 trillion asset, and this is what we talked about in the last one. So would it be crazy, again, for Bitcoin to have a 10 trillion valuation? Just Bitcoin, not cryptocurrency, just Bitcoin. After all, it isn't just a currency or even a store of value. It is an entire trusted, verified, secure source, just like we talked about. It's the future of our entire medium of exchange and all the money itself. I'd also include all the other parts of the system, from digital central bank currencies, private currencies based on those such as Libra. All right, got to throw that in there. All the other digital assets from Ethereum to Ripple and EOS, along with all the tokens. All of that combined will be the next 100 trillion financial system. Bitcoin is a call option on it all. It is the future. It is already the best performing asset in all recorded history, and it has been going for 10 years. It was born out of the financial crisis for exactly what is about to come in this next crisis. This is literally what Bitcoin was invented for, and I couldn't agree more. Look, it is one of those asset classes that is crushing all the other ones. It's beaten gold, it's beaten the S&P 500, it's trouncing oil right now, and it trounced oil in 2019. So don't you think that all those big industries that are coming aboard, like Fidelity Digital Assets with 2.46 trillion assets under management, which is Fidelity, TD Ameritrade, 1 trillion assets under management. They've even got Van Eck, who is big, huge gold bug, and they made the investment case for Bitcoin just in January 2020. And finally, top it off, we got Circle, which is an USD coin. So, hey, not too bad. If you don't think that all those different companies are going to go to their clients and be like, look, I know we got slaughtered last year because of what happened with that black swan event, but here's what we're going to do. We're going to put it into cryptocurrency digital assets. They have crushed everything, especially Bitcoin, over the last 10 years. And to maximize profit potential, there's other different digital assets out there that we can get you into. What do you think? Sure, sounds like a great plan. And I can only see it going that way. So let's wrap this up. So let's go down. More charts, good stuff. So Pal states, personally, I'm buying each and every day. I think this is the biggest trade of our lifetimes and just the time when we need it most. This is not an equity that is going up to 200x. This is an entire asset class. We all need to have Bitcoin. How much is up to you? The allocation he's personally aiming for is his total available liquid assets is 25% trading investments, 25% cash, 25% gold, and 25% Bitcoin. I'm putting my money where my mouth is. So that's it. So look, I know that was kind of a frightening article, a little bit to go through it, but you have to understand, now that you know these things, you can think about them, rationalize, and be prepared. And I think that is a bigger thing than just being kind of out there going, just hope. So we're taking a look at some hard data. We took a look at a great report written by a pretty substantially knowledgeable macroeconomist who takes a look at these every single day. So if I can take a look at this and go, yeah, I think this is where we're headed, I feel a little bit better. Let me know what you think in the comment section below. Love to hear what you guys got to say. So that's it. So thanks for sticking with me through all these rants and whatnot. Really appreciate it. If you like those types of videos, there's going to be 2 more that's going to pop up on your left and right. Not sure what they are. YouTube algorithm, all that stuff. So that's all. So thanks for sticking with me, and I'll see you on the next one.